What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. Thank you for being here. Good to see everyone in the chat. A bunch of people waiting here looking for dollar index. Of course, we'll do some dollar discussions. We'll take a look at gold, indices, commodities. As always, we'll do a little bit of a round trip on everything. Nick, you previously mentioned that the effect of the conflict will show up in economic data later down the line. Why is that? Why doesn't it show up in the preceding month? That's a good question. So if one of the most obvious places to think about with that is oil, right? So oil being higher, what will happen there is that gas prices won't reflect it instantaneously. I think it's like a 1-month delay is what I've heard before in regards to like, so if gas prices if energy prices, oil prices go up a lot, it's like 1 month later that the pumps really start to reflect that. And so the other thing about that is that if you have something that is a short-term expense that's like exceeding your usual budget, that's fine, right? Like for most people, they can bounce back if they have like a one-time expense. Like let's say your car breaks down and you have to do a repair and it costs you $1,000, right? That's going to hurt for most people. It's going to hurt, but it's not going to kill you because it's not a persistent and consistent problem that you have to keep paying for over and over and over, right? You fix it, and then, you know, a couple paychecks later and you're back to normal. But when it comes to gas prices, that is why when we talk about oil price, it is not about whether or not the price of gas jumps up one time, right? And then if it comes back, because then that's not a big problem. Because yes, gas prices come up. Oh, that's painful. And then it comes back down. All right, fine. We're back to normal. The way it would start to impact economic activity, business earnings, the consumer spending, where this would start to become a problem for the economy would be if gas prices remain elevated for a suspended period of time. So we have seen oil remain mostly flat for a couple of weeks here in the 96 range. What would put pressure on the economic situation would be is if we stay here for a very long time, or maybe more obviously painful would be if oil price continued to rise and stayed a persistent drag on the consumer's ability to spend money. Because think about this, if money is just getting thrown into the gas tank across, you know, the entire economy, not just in the United States, but in global circumstances, if that is the situation that the economy has to fend off, well, it can start to really hurt the consumer's activity. And consumer hurting means earnings for companies could take a hit. Earnings for companies taking a hit, layoffs start to happen. Layoffs, it kind of creates a vicious cycle where layoffs cause people to spend even less money, and that hurts earnings even more, right? So you can have that be a very serious problem. Now, granted, the market is at all-time highs or just near it. Why? because the market is optimistic that there will be not a persistent elevated higher oil price. In fact, on the geopolitics side, which is only one part of the story, right? I know geopolitics, Iran, Strait of Hormuz, like that gets the headline, but there's another side to this. Tech earnings are expanding dramatically. The data center build out is an aggressive stimulus. It's causing stocks to fly higher. There's multiple stories here at play. That's a very positive one. The negative one would be if oil price continued to rise or stayed elevated for a suspended period of time. Yes, that would hurt the economy. Would it send us into a deep, dark recession? Well, I think it depends on duration. If you're talking about we stay up here, if the Strait of Hormuz stuff gets, kicked down the road for a very long time, yes, it will start to impact negatively the economy, almost certainly. Elevated oil prices, historically speaking, are a very painful thing for markets. One of the more obvious examples would be going back to 2008, where it wasn't the only reason, but it was certainly not a helpful thing to have gas prices going up on the consumer for years on end, squeezing the available budget of the average person. I mean, well, for everyone, but especially for the bellwether of the consumer, the average person going out there and having to cut back another spending because they're paying so much at the gas pump, right? So yes, it is something to keep an eye on, but the more important thing is whether or not this is a steep rise that keeps going, or if it is a pop and then a drop. A pop and a drop is perfectly fine. Like we can get through that just fine. The problem would be persistently high oil prices. So that's where, again, market's kind of making the bet that this is going to more likely cool off than not. And so stock market rally continues. But it's not just about that. The other side of things is clearly the reason we're in such a strong bull market in the first place, which is the enthusiasm and the excitement around AI. I know we've heard that story for a while, but there's something developing that is pretty fascinating, which is semiconductor demand is off the charts. We are hitting our best win streak in semiconductor history. Data centers, right? They're building out like crazy. And it is largely supported by the idea that the big company earnings are growing and projected to grow tremendously this year. And so why does that matter? Well, if Amazon, Google, Microsoft, Meta, if they are expected to have better than ever earnings and keep expanding their earnings dramatically, what does that mean for their spending on data centers? Those are the big players spending all this money. Well, that's a ton of stimulus getting injected into the US economy. GDP remains strong in the US, made part by the huge data center build out. This massive, massive spending might as well be a bunch of rate cuts because you have something happening in the economy that is pretty tremendous. You have the giants, Meta, Microsoft, et cetera, spending tremendous amounts of money, investing back into the infrastructure that is the underbelly of the stock market rally in the first place, AI. So you look at this and you say, okay, earnings growth is expanding. Corporate earnings are rock star. The data center build out is supported by the big companies are seeing earnings growth because they're investing in AI, or that's the theory. You look at this and you say, that's bigger than the Strait of Hormuz stuff, unless the Strait of Hormuz stuff turns into a disaster, which it could. But the stock market is up so much because we have a known now. We have something that we know, which is spending on AI is going to keep going crazy. And that is straight up stimulus to the economy. Does that make sense? I hope that round trip made sense. I explained that so much recently because a lot of people are very fixated on the Strait of Hormuz and they say, how in the world can the stock market possibly go up? But remember, it's not one variable. We didn't, for the last 10 years, we haven't been focused on the Strait of Hormuz, and that's why the stock market's gone up. The stock market has gone up the last 10 years so dramatically because earnings growth, as well as valuations on companies, like the price people are willing to pay, has expanded dramatically upwards. Now, you could say there's increased risk there. I would agree with you. If you say, people are paying more for stocks now on a price to earnings ratio than historically speaking, that is just a fact, right? In terms of, well, not all-time highs, but people are generally, stock pickers, stock investors are generally paying more for earnings than they have historically. And why is that? Well, the bulls would argue that earnings growth is much more resilient nowadays, that you have, very efficient companies with huge leverages or levers that they can pull, and the growth is sustainable. Tech stocks are, notoriously more growing than consumer staples or things of the past that made up a bigger part of the index. I know we're going really heavy on the theory here, so I'll jump into some more charts, but I just wanted to give you that context on why the stock market rally, in my opinion, is not nonsense, right? It's not, you're seeing that all over the place. This is a rigged stock market rally. It doesn't make any sense. To me, the backdrop for stocks is a pretty good one. If we take a look at some of the fundamentals, some of the macro, right? You have PPI. People were really worried about a big shock to inflation. There was an uptick in inflation, don't get me wrong, but it was much less than what economists thought. We'll get more information with the consumer price index next go around, and the PCE number, I believe, is this week. So I'm very curious to see what inflation readings look like this week. But jobs market data has held up pretty well. Somebody got really upset with me. Every week, I get people who get really upset. They say, no, the stock market, the data is fake when it's good numbers, and when it's bad numbers, they say, see, it's bad, right? So you have to take your pick. Is the jobs market data completely false and you can't trust any of it? Or are you going to take some validity out of it when it contradicts your view, right? The way I look at jobs market data is the BLS, Bureau of Labor Statistics, has an exemplary misstep in regards to, like, they're very often wrong on the data. However, it's, to me, even with the revisions considered, it's still holding up better than expected. If we take a look at the jobs report, let's do that really quick, just for frame of reference here. We'll go economic data, jobs market data, NFP. So every week, this is, I'm not trying to be political in any way. I mean, it happened under Biden, it happened under Trump, but the revisions lower have been a persistent theme. I'm not ignoring that. But what I'm saying is that when you say the jobs market is terrible, it's awful, well, it's not amazing. I agree. But it's also not in the dumpster. We still have positive hiring going on. And we did recently see an uptick in the data relative to expectations. You can't just look at this and say, see, it's a terrible jobs data. But then when it comes out positive, you say, well, no, that's fake, right? Take your pick. Which one is it? Is it fake, or is it, anyways, my point with jobs data is, yes, there is some clear, sharp revisions that make this very hard to trust fully how valid the data is on initial drop. However, even with the revisions considered, the downward revisions that have happened under both Trump and Biden, by the way, it's not just Trump's administration or just Biden's that did this. It was very clear under both. Downward revisions have been a theme for a while. You look at that and you say, well, we still have okay hiring, especially given that if we think interest rates are going to come down, which could help with job stimulus, I think we're okay here. We're not in excellent situation, but in the US, people are 4.3% unemployment rate is historically pretty low. At one point we were down to 4%. We've risen, but we're not rising dramatically. And when you compare this to other places, if you look at the UK, for example, 4.9%, pretty close to us. But take a look at Europe, 6.2%, right? You can look across the different places, 6.7 for Canada, Australia, 4.3, right? So I'm just not in the camp of thinking, okay, the jobs market is crashing, everything is terrible. There's always that cohort on my YouTube comments that gets very upset when we talk about the economy showing some promising signs, because people, they I don't know why, they just really cannot come to accept, like, the stats in front of them, right? Now I get it. There's skepticism around government data. I get that. But generally speaking, if you think everything is fake, then you shouldn't trade, because then isn't this fake too? If you think that's fake, then shouldn't you just ignore the markets entirely? I don't know. But anyways, I think that the best way for me to look at this data point is to accept that, yeah, there may be some missteps, some erroneous entries. There may be definitely some room for improvement, but it still gives us a general pulse check on the state of inflation, jobs market data, and economic growth. Anyways, when I look at this, I look at this S&P 500 and I say the jobs market data has been beating expectations recently. That's good. Inflation's been kind of mixed. And economic growth has actually been showing some resiliency. Manufacturing PMIs, 52.7 versus 52.3 expected. If we take a look at services PMIs, they did miss expectations, but they're still at 54. That is a strong number. So we look at the economy and we say, okay, we have growth here. We have inflation that seems to be at tame. You have a jobs market data point that looks okay. I don't think we need rate cuts in this market. Clearly, we're still seeing stocks at all-time highs, earnings growth tremendous, economic resiliency without rate cuts, right? This is the kind of market that I like to be a buyer in. So personally, I'm waiting for pullbacks in the stock market to take opportunities. And you might get it this week because this is where I wanted to go with this. This week, your big stuff to watch is tech stock earnings. Okay. This week we have on Wednesday, we have companies like Meta reporting, which is a stock that I, of course, own shares in. We also have Microsoft on Wednesday, another big one coming out. We also have, also I posted about this in our Discord. Give me a second here and I'll pull this up. Stocks analysis. There we go. So check this out. We have a bunch of earnings this week. By the way, you can join our free Discord if you'd like. I posted this in our analysis segment. This is completely free access, by the way. You can get updates from myself and our team here day one. If you're interested in that, we'll drop the link here in the live stream chat. But check this out. So we have Starbucks, we have PayPal, Visa, Robinhood, Spotify, T-Mobile, Coca-Cola. We have tons of stock earnings this week. Another really big day is going to be Wednesday, where you have Amazon, Meta, Google or Alphabet, and Microsoft. These are ginormous days in regards to huge corporate earnings releasing all at the same time. So that will have huge impact on the indices. So if you're watching them this week, keep your eye open on Wednesday and Thursday. Those are probably your biggest potential moving days of the week, just based on the huge amount of data coming out. The dollar index did something interesting. I don't know if this is... if you guys are seeing the same on your charts or if there's a different DXY, I'm not sure. But dollar index gapped open, came right back down here and continues to sort of jump back around. If I take a look at dollar is something I'm still kind of neutral on. I have just a very slight bullish lean on the dollar, but I'm not in any urgency to take trades here. Jobs market data holding up okay. Economic growth holding up okay. Some mixed technicals from seasonal trends getting bearish readings currently. So I'm in no rush to take longs in the dollar, but I am watching it. From a technical basis, this is just a very choppy chart, right? You just have dollar index topping out and bottoming out, bottoming in the 96 area, topping in the 100.5 level, and just trading back and forth for some time. We went down as far, we went down to 96. We bounced off there. We came back up to 100.5. Sold off there. The question now is, are we going back down towards these lows, right? Or are we going to put in some kind of higher low? I think if you're looking for a larger breakout in dollar index to the upside, what you'd probably want to see is actually, and I say this in a weird way, but geopolitical problems arising clearly caused a big jump in the dollar index, but also sticky inflation, yields rising again. Those sorts of things would get you maybe more of a bull catalyst for the dollar, but yields have mostly cooled off. So I just have a really mixed bias on the dollar at the moment. I don't have a strong conviction one way or the other. And that being said, I lean just slightly bullish on it, but not enough to take any trades. If I take a look at gold, gold here also very neutral, very mixed reading here. Gold just has gone to sleep. I mean, look at the, we could do a quick study here of the average true range on gold. And what you can see here is that as a gold trader, if you're somebody watching, the gold chart, let me just switch to, let's do what did I do? Average true range. Let's do last 7 days, and let's change this to white so we can see it a little easier. Okay, so check this out. This is the average true range on gold. Couple months back, gold, I prefer personally to trade the higher volatility periods in gold. I like when you're getting, you can get an entry, you pay your bid ask spread, and it's immediately moving aggressively, right? So you had this huge period of time where gold ripped and ripped and ripped, and you had these very big moves. And then what we've seen is we've gone to sleep in gold, where we've just had mostly a declining average true range for gold. So if you've wondered why is gold, acting so funny, it's because volatility for gold has really contracted. You're just not getting the same kind of moves. And another way you could look at this, guys, you could look at the GVX. Did I type that right? No. GXV? I'm missing GVX. Somebody help me out. I forgot the symbol, but there's a gold volatility. I guess I could look it up. Gold volatility. GVZ, there it is. Okay, so check out. This is the GVZ. This is like the VIX is for S&P 500. The GVZ is for gold, right? So look at gold volatility. It has really cratered here. Gold and silver obviously were all the rave. I think you had the crowd enthusiasm going for gold and silver as we turned the calendar year. Everyone chasing gold and silver. I mean, I knew people in real life who were asking me around that time about gold and silver. That's how, by the way, just anecdotally, whenever you see that happen, be very careful. Almost always a top is getting close. But anyways, gold volatility has really cooled off. So I think that presents an opportunity longer term. If you do see gold chill out and continue to moderate, move lower, I think you have lost some of that enthusiasm that you had in 2025. People probably got burnt on this and have walked away from silver and gold. I mean, this is how it kind of went in 2011, which was the last time you had just the monster rip in gold and silver. It looks very similar to what is happening right now. I mean, look at how history, in markets, they don't necessarily repeat exactly, but it can often rhyme almost to the same degree. I mean, you had just the parabolic run up at the end in 2011. Everyone, my dad at the time said everyone was talking about gold and silver. Like it was just, I mean, I wasn't trading or investing at that time, but everyone was like, gold and silver is the new paradigm. And sure enough, gold crashes. And I would guess it was probably, about the same pullback. Like it's so weird how that happens. Look at this. Gold tops out, goes down 20% in a couple of short weeks, rallies back, but then drops again. Where did things go from there? Sideways, and like painfully sideways, like sideways. Years went by before we saw another high. All right, look at this. I can't even fit in one screen. I'm zoomed all the way out. I guess I got to do this, right? If you were up in there, it took us to get back to those highs 3,200 days. That's 2,300 trading days to get back to break even if you bought the highs. So when I look at gold, are we repeating the pattern? I wouldn't be shocked, to be completely honest. We have a new Fed chair who I think might be a little bit more hawkish than people think. And the pattern is quite literally like almost to the T. Down 21% in a few weeks, rallied back, dropped again. I would not be surprised to see gold enter into a more prolonged sideways market. And guys, gold is not like stocks. Stocks tend to do this over time. They tend to do this over time. They have big crashes. Then they do this over time. They crash. They go up. They crash, right? That's the stock playbook. Is, almost always, if you watch my channel, you see a stock market crash, or I mean, we really haven't seen a true stock market crash in a very, very long time. Never in my trading career, actually. 2020, yeah, that was a crash, but it was like a blip in time before it started moving back higher. Anyways, if you watch my channel, almost always when you have those sharp drops, to me, that's a time where you buy stocks that you like. Now, of course, you do what you want, and not financial advice, but when you get big drops, that's typically where I'm personally looking at stocks to buy. Granted, gold is not the same. You cannot trade commodities the same exact way you trade stocks because commodities can go to sleep. Okay. Commodities can go absolutely to sleep and they can absolutely roar in one direction like you've never seen before. Commodities are different than stocks. When commodities want to run, they can go straight up for years on end. Like here is 2000 to 2011. Nothing but upside, right? This was an incredible decade. And by the way, this was not a great decade for stocks. Gold did wonders during the 2000s. But I'm showing you this because look at this. Look at this period of time. Let's go to the weekly chart. Do you see what I am seeing? Like, let me just paint a picture for you. This is why being open-minded and reacting to what is happening, not what you know, this is why I don't speak in absolutes about markets. Look at this. If you had said this is, you had one of the most unbelievable wealth generating, or maybe wealth saving returns in gold in the 70s and 80s. And then gold went to sleep for decades on end, 3 decades in a row before you saw your return come back. Do you see what I'm saying? I'm showing you that because that's not what stocks, or US stocks at least, do. Japanese stocks, they knocked on my door as I said this, and they said, well, take a look at Japanese stocks. They did this too. But my point is, gold can go sideways for a very long time, just like it can trend in one direction for a very long time. So don't make the assumption that gold has to scream through the all-time highs. For me, as a trader, I trade what's happening now. I trade the directional bias that it's in now. I'm not, a gun-ho, gotta buy gold every single month and just stick it. I'm also not that way with Bitcoin. I am that way with stocks. I am a fan of, every time stocks are down, I'm taking that as an opportunity to add shares to companies that I really like because they're cash generating. They yield something, right? That's why I like stocks the best. I don't like crypto the same way I like stocks. I mean, I'm not saying crypto is terrible, but to me, crypto is a trading asset, just like, gold to an extent. I do like to have some allocation to gold just as a hedge to really the debt system. That's honestly the best use case for gold, in my opinion, is a hedge against national debt blowing up. But stocks are my favorite place because they generate something. Real estate and stocks generate some sort of income. When you buy shares of Apple, this is a cash producing asset that over the long term should, under good leadership, continue to move higher and higher and higher. Guys, we've got Ivan taking over the stream here in just a second. Real quick, before I move on and show or let Ivan take over here, before I do that, if you don't have a copy of Edgefinder, now is the golden time, speaking of gold so much, to take advantage of our massive discount that we currently on. So first of all, Edgefinder is a one-time payment. So you don't have to pay every month. It is not a subscription. It's not a pay until you die type of model. It is a pay one time and it's yours. You get access to all future updates. You get access to all of the different tools that we have. There's no hidden paywalls once you purchase, right? We have everything that you see here is a one-time payment for access to unlock the tools built by our team here. We launched this product to the public 4 years ago. We started building it about 5 years ago. And if you are not currently using it and have thought about getting it for yourself in the past, now is your chance to do so at our biggest discount of the year. You get access to things like our commitment of traders tools, our crowd sentiment measurements, our macro scanners, of course, our scorecards, which are very popular, the top setups page, and so much more. If you're not currently using the Edgefinder and would like to be, here is how you can get access for a huge discount. The link just got dropped in the live stream chat to where you can speak directly to a member of our team to take advantage of our 40% off discount. However, if you are watching here live with us, you actually get 45% off if you message in right now. The other thing is you can also get a payment plan set up if that's something that you're interested in. Some people, they're not able to make the full purchase, but they don't want to miss the sale event. We can lock in the price for you and set up a payment plan for you if that is something of interest. Please reach out to our support team on our website, and they can get that sorted out for you to fit whatever your current budget is. With that said, up next, we have the one and only Yen Man, aka Ivan FX. Stay tuned, coming in just after this quick break. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Hola, ¿cómo estás? As hola was the sponsor there. Yen Man is back in town with another, I wouldn't say it's a profitable trade yet, but Maxi, don't trade your dollar right now. I'm in a buy. 42 pips in. Don't take my profits. So yeah. Loaded and running it's to trade. Currently at resistance, so I am happily trading and sitting there. So we are just waiting for the markets to turn around or turn higher or whatever. The reason for the trade was pretty simple, pretty straightforward, and it was that Iran gave out a 3-point plan or 3-stage plan to US. US at that point hadn't responded, or if they have at this point even responded to what they think about it. Where the crucial part was that they wanted the nuclear talks to happen after the Strait of Hormuz and the blockade is over. So if that, whatever that means, if that is something the US can agree to or not, I don't know. But I would argue that Iran, kudos to them, they have changed their bias from Adabada to blah to okay, we can actually just negotiate. Because last week I felt like they were just saying no, we're not going to discuss anything with anybody. So, and then it seems like they'll come up with a plan at least. They have visited Oman. I wanted to make a deal with Oman in terms of managing the strait. And I saw something that half of the strait is mined. Whatever that means. So I'll let you go to 117.80. So I need to have my take profit at 117.80. Okay. I'll put alert on it. Then I can tell you want. Okay. Fair enough. Thanks, Maxi, for being so kind and considerate. Sluggy, full portion you're short into CPI. Yeah, cool. I see. So for the Yen Man, I don't know what Nick talked about for the great length of it, but not disrespect, I wasn't there. But the Aussie Yen. I was thinking that should be a range. And I'm not going to say that somebody might be deranged for trading it, but it's a bit uncertain. We have dollar weakness, we have yen weakness. We have Bank of Japan tomorrow, which is likely going to hold. Now, the question is, market has priced in a rate cut in their June meeting. So they have to confirm or deny that at least. And if they don't do anything tomorrow, then I think that yen should weaken unless they can figure something bullish to say or hawkish to say. And until then, yeah, I think the upside, short term at least, is the way to go forward. That is against my dollar bias. So how do we trade then? Because somebody asked earlier, what about Aussie dollar? Dollar's bullish, Aussie dollar's bullish, Aussie's bullish. What do we do? Same situation. What do you do when you have two strong currencies or two weak currencies against each other? What does your checklist say? It normally says, do not. That's not trading advice. I'm just saying it's pretty easy. And sometimes we have a difficulty of understanding that could be the simple answer. But yeah, trading range is not something I trade nicely in. And I traded, I think I traded Euro, Aussie, dollar, yen here with the what I believed was both of the parties agreeing to ceasefire, but and an agreement, but that wasn't the case. So I had a break even here, and that was about 8th of April or something. Hello, thoughts on euro dollar, mate? Yeah, I can do that, Leon. And it's pretty straightforward. We are in a pullback. We have met our it was very aggressive yesterday, the entry that I took, but it is turnaround, has got a bit higher, coming through some resistance. So we are currently at what I would call the 50-50 chance. We can go higher, we can go lower, we can go whatever it wants to go. It doesn't really matter where we go because I have already done where I want to be sitting, and that is higher high. That means for tomorrow morning, if nothing else happens, that could happen over the day, was that to be a pullback to 1730 or so, and then buying again. So bullish is my direction, mostly because of ECB's willingness, hopefully, to rate hike in June, to the release and the end of the war, which means that we're going to price in recession in the United States, which means dollar weakness, or just the reason that since we have strength going into the war, we then have to unwind. It's a money flow situation, and that's when dollar becomes weak. And since euro dollar is 70 or 80% dollar, and a weakness in dollar equals strength in euro. So that's kind of why I'm in that one. Why is it recommended to trade Australian dollar? Why is it recommended to trade the Australian dollar when a beginner trader in fundamental analysis? The short answer is it's the simplest one to understand. In all the complex world, it has a very straightforward risk profile. It has a very straightforward, not so many opposite drivers, and it's opposite dollar, US dollar. So when you have Australian dollar, you don't have a lot of other considerations when looking into why the currency is moving. If you take, for example, yen isn't straightforward. It's more management of the feelings of the Bank of Japan. It's a strong opinion, but it's not really driven by inflation. It's not really driven by fundamental. It's more driven by Forex prices and the uncomfortableness that the Bank of Japan members feels about the yen weakness, but at the same time they're spending 3 trillion yen a month buying government bonds, adding liquidity and making their currency fall. Yeah, something in that direction. I wouldn't say it's recommended, but I'm saying starting a direction, because what you need to do as a trader to begin trading is you have to understand risk. Not only your stop loss on your lot size and your and all that in comparison to your account, but also where's the risk sentiment going. And Australian dollar is reacting very positively to risk on and very negative to risk off. So it rewards you positively and handsomely in a risk on environment, and if you are in a buy position, it punishes you a good chunk, but it doesn't cost so much as other currencies just per pip. So it's a bit kinder, but it's still a 30 plus, a 30% up, 30% down. Depending on which risk environment we are in. My target, very good question, GJ Gaming. My personal target is 119, and it I have said an A, not available or not no attention, but I haven't set in 119 as a fixed one because I am adaptive, because this entry is adaptive. So I need to be adaptive that the negotiations collapses. I have a new target now, apparently, 1718. So I need to take partial profits at 1718, according to Max, because he will start shorting. But yeah, that's kind of where that is. British pound, Canadian dollar. Yeah, I mean, great suggestion. Great suggestion. I really love British pound and Canadian dollar. If it can just make a higher high, okay? If it can just make a higher high, then I'll be very okay. Bullish on pound, bearish on CAD. So it soon can be a good trade. That's my direction. And then why is CAD strong today? I don't know, man. Aussie CAD is a bit depressed. Pound CAD is a bit depressed. New Zealand CAD is okay. It's actually quite higher. Euro CAD is quite depressed. So I don't know. I'm waiting for CAD strength to weaken, meaning oil price should probably go lower then for me to be alright. But it's not. Seems like Maxi, since it seems like Max is right about his oil trade, and he is in at, what is it, 93.75. So your entry is give or take something in this direction. Yeah, so he's buying, and of course it's against my bias, what I believe should happen. But at the end of the day, the Strait of Hormuz is closed. There's no real opening yet. And we are spending more and more of the strategic petroleum reserves that we have across the board and across the world. And we are spending and spending and spending, and no oil is coming out. And we are probably going to have a few jet fuel crisis at some point in Europe, because everything comes seemingly from Middle East, and that's not coming out of it. So, yeah. Good entry, by the way. Congratulations on that. But to me, the risk is so vigilous of a news event happening that it would tank it either lower or higher at a 50% chance. It's just too much for me. CAD and indices don't need a reason to be strong. It's like you are what do you call it in English? Is it not banter? It's called. Are you just there to provoke? What is it called? Rage bait. Are you just rage baiting today, Sluggy? Did you check seasonality for dollar? I know seasonality for dollar on top of my head. Seasonality for dollar is April. April dollar seasonality is lower. May it is higher. So we are somewhere now between dollar weakness in seasonality and dollar bullishness in seasonality. In fact, matter, oil is actually bullish for April, even though it hasn't been. But again, seasonality, in my humble opinion, seasonality fundamentals goes out the window and sentiment takes over, and where the next deal in the Iran war comes in as the most important drivers. So yeah. Basically, we are doomed. I wouldn't say we are doomed. I think, we are pretty okay. Unless the dollar strength just came in out of nowhere. I haven't even checked the euro yet. That's just Keir Starmer doing Keir Starmer things. Okay. Fair enough. As to me, I set up this last week, and I said, that's the most aggressive entry on dollar. That's the second most aggressive entry. And for today, we have hit bearish target, I believe we have. So it makes sense for dollar to come back up. Now the question and the risk and the fun part is, how far up are we going to come before we fall down again? That is the big question for me today. So somebody asked, any entries? I'm waiting for market to pull back down again a bit. 1730 would be great. I don't want 17 again, but yeah, 1730.20 seems like a good. Yes, like you are you are the best rage baiter in town. Keep doing it. You might get me off my rails at some point. Dollar is going nowhere. Is that number 2 rage baiter? Wow. Okay. Okay. Rage bait number 1, rage bait number 2. I'll take you up on a serious note. I agree with you, and the reason why is because we don't have a direction because of in negotiations. What accent is that? Basketball. I can change my accent as where I want to be. And somebody thought I was American one day, and I thought I'll take it as a compliment. But if you're searching for where my accent is from, my actual accent, you are never gonna guess where it is from. Because if you hear my prime minister, even I don't understand his English. But yeah, it's one of those countries that I think we were at some point the best country in the world, or the highest ranked country in the world, where English was a secondary language. But yeah, you're welcome. Back to trading. I don't even think we have a gold. Well, maybe not. I don't think we have a lot. No, we sold it. I think we sold our gold reserves in 2003 or so. But yeah, my direction on gold is higher whenever we have a resolution. And until then, and as Nick said, gold can range forever. And yes, gold can range forever. We had the start of the war was what? That was okay over there, but from April 1st or so, we have had the same price. We haven't gone anywhere. So there's ups and downs and whatever, but nothing in between. So the only real drivers, I'm focusing on drivers, the only real driver higher would be a resolution. And until then it's done. Safir says he's Norwegian. My accent is not Norwegian. Do you want me to go to Norwegian accent? Okay. Because you're not going to like what I'm going to say. Denmark? No, that's an insult. Also, you want me to talk like a potato? No, we don't do that here. But we speak very good. Especially if you see, I think it's a TV series called Vikings. Vikings is very good in English. Yeah. And when I do that, people are like, what did you even say? But yeah. Now, the reason why I changed my accent, and literally actually, is because people didn't understand me. And then I went more American, and now people call me an American. So I'm like, I might be white, but I'm like, not that white. But I mean, could be true for that matter, because our ancestries, not my family, but my extended family, went to America back in what they call before 1930, and they are somewhere in Minnesota, or as we say, Minnesota, or North Dakota. And funny question is that my great grandparents met in Brooklyn in 1901 as two people that went with a boat for 2 weeks and met there. And that was without airplanes. So pretty dope. Oh, Vikings, yeah. And by the way, there was actually some of you guys who actually Googled my name. That was actually good effort. I was like, okay, good effort. And if you find what my name comes from, then you'll probably guess it. You know what? I'm just waiting for you all to fall, Frady. And that might be I'm 10 pips away from entry. It's Norway. I'm 10 pips away from entry on euro. I am. Pound was so strong. Oh yeah, it's Keir Starmer true. Yeah, pretty far. I need to protect myself on this one then maybe. Okay, 40 or so pips away from pound. That's the yesterday's entry, but 34, 35, 30. I can be interested in 34, 35, 430. But then there's a Keir Starmer situation that I'm not too sure if there's any UK people there would tell me more, but they're gonna have to potentially have a vote of parliamentary probe into whatever he's misled Parliament on over Mendelssohn. So this is also okay, some more of the app files shenanigans. Okay. So the question is he going to get a vote of low confidence at some point? And as far as I have been told, that there was a growing issue within his own party. So that is definitely a driver of pound at the moment. So that still doesn't save me or help me in my British pound Canadian dollar bullish, hopefully higher highs and higher lows scenario. It also doesn't help my British pound Japanese yen higher highs and higher low situation, even though it's really higher. So that's that. So for yen, we have Bank of Japan tomorrow. And what generally tends to happen, if nothing else is mentioned in terms of a rate hike, which I find widely odd, but fair enough, is that euro yen is going to go higher. Pound yen is going to go higher. Aussie yen is going to go higher. Dollar yen is going to go higher. It's going to go higher in the sense that there is lack of a rate hike. There's lack of anything in that direction, and that the press conference comes out at 8:30 or so, 7:30 a.m. your London, Paris time tomorrow, Berlin time tomorrow. So we'll probably wake up or come up to that they have done something that could lead to 200 pips so volatility move on dollar yen. So that's that's a bit of fun, but that's just worst case. And normal case is that it doesn't really do anything. The reason why I say I'm leaning to more volatility might not be happening is because we have the recent inflation increases in Japan has been because of the war in Iran and US, and then the central bank becomes more like, well, that's not necessarily a real driver in the economy, so it's a short-term thing, so we kind of ignore that the underlying inflation is still too high for us. But since it's driven by a war, then we can't really hike, because at the end of the day, when you send when you send consumer prices higher, then that generally kills growth, and growth is killed in Japan at the moment. So if you kill the growth, then you are going to have a bigger fall in inflation on the backside of the war. So if you then increase, and you've increased into even less growth and even less inflation, and you did a premature decision. So that's kind of what they're afraid of. Og vi kan kjøpe hele Sverige hvis vi vil. Yes, that is correct. What about Austin Swissy? Can you tell me the inside? For me, it's an uptrend. I agree, and yes. Ever Prime Minister gets a vote of low confidence in England, apparently. Yeah, and they have had a swing door in terms of the prime ministers, and it's a risk event for the British pound. But also the problem then is that the second in command is also in trouble for some tax evasion. So the question then becomes, who are they going to vote? And so it's going to be a vote within their own party. It's not going to be a whole new election. So they're just going to vote within their own party. So the reason why there's not going to be that much British pound volatility is because we still have going to have the same policies and politics out of it. It's not going to be a massive change just because a new person comes out, because generally speaking, the prime minister is generally just a reflection of the party policies. So unless you throw the party out, then I don't think it's going to have that much volatility. But of course, right now, that's volatility, and then it's going to diminish and not really be a part of it. Getting the money back on the board, back on the books. Administrational Norwegian name derived from the ancient element A means luck or island, or the other part is it means victorious winner. No reason to short euro yen yet. I mean, if you can throw a boomerang into the wind and successfully retrieve it when the wind is above 100 miles an hour, yes, I believe you can. Sluggy don't have a rage bait anymore. But yeah, so Maxi, you're onto something. I can see the resistance. I can see we are reacting to that level. So Austin Switzer was mentioned. Oh yeah. Oh no. Oh wow. Okay. All right. We missed that uptrend. Okay. So this is Aussie going bullish. Well, the bullish trend was down here though, but great. Why didn't? Well, I didn't. So that's where the start of the war. The start of the wars here. So it's just been an uptrend, which is very interesting. There's an uptrend ever since the war started. So wait for the pullback to come back down again, I guess. Too high right now. Seems like gap open on the Mondays seems to be the correct entry time, anyways. And of course, Mac is in office with you. Of course you are, Max. You're such a great trader. So yeah, nothing there. So yeah, it's a buyer. I can do it on a jet ski. That's funny. That's funny. Your guys are so funny. I got just having a laugh. But I'm waiting for my euro dollar to come down. I'm waiting for my pound dollar to come down. I'm waiting for my New Zealand dollar to come down. I'm waiting for Aussie dollar to come down. I'm not really. Yes, just gone higher. I'm expecting pound CAD to go higher. Not really yet. I'm waiting for Euro CAD to go higher. Not really yet. New Zealand CAD. Yeah, that's not a banger. So that's me. You can jump over if you want to listen to more of my fun jokes. To head over to some of my fantastic analysis, head over to EvanFXW on YouTube. If you are on Discord, or if you're not, you can also reach out for me from one-to-one mentorship. I really, really love to speak to you guys, get yourself to become better traders. And if that's one thing you need, I'm the one. And absolutely flying colors in terms of feedback last week. So, boom. I'll see you on the next one, and then give a hand for Ellen.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone's having a fantastic morning and evening. This week, we got one of the biggest weeks of the year in terms of data releases and things like that. We have 4 central banks being very active here. You have Bank of Japan later in the evening, late at night. You have the Fed and Bank of Canada tomorrow, and on Wednesday, Europe and England. So we have lots of things to talk about here, lots of opportunities. And then as far as data releases go, you have, your JOLTS, consumer confidence, GDP, jobless claims, non-farm payrolls on Friday, and then you have Max 7. So definitely a stacked week, and I'm hopeful for some volatility, especially in currencies, because to be quite honest with you guys, currencies have been quite silent there, not much going on there. So I'm eagerly waiting for something to pop off there. So hopefully with these central banks this week, we can find some opportunities there. But we do see a clear appetite for risk. And so I'm curious to see if that's going to continue on throughout the week, despite all of the central banks and what they're saying their forward guidance looks like. Just looking at currency strength here for today, you can see that the risk currencies are on top. And then if you look at the top setups page here on the Edge Finder, you have the Aussie doing quite well, which I love to see. And it seems like that right there seems to be the obvious play. However, price action has really just left the station. But you see equities here are still on top today, slightly in the red for the S&P and Nasdaq, but nonetheless, they are still at those highs. And so we'll see how sensitive this market is, especially when you have these big company earnings here later this week. So we'll see. When it comes to trade setups that I like the Aussie basket. So I see that Max here has been effortlessly just doing well here with the Aussie basket there. So I love to see that. Hey Max, how you doing? So I want to participate, but it seems like the price action across the ones that I like Aussie CAD is up there, Aussie Swiss. Look at that monster just run up there. Wow, I pretty much shot myself in the foot when I took out of these, got liquidated on these pairs here. Aussie Kiwis actually pulling back some there, so relative underperformance with Aussie Kiwi. So maybe I can participate in this one. And if we look at the Edge Finder here, it's still getting a very bullish reading of 14. So I love to see that. So maybe this is something that I can get active in here very soon. If I go down to a 4-hour time frame, I would like to get in on a bounce of the 20-day moving average here in orange. So we are pretty close to that. So we're about 40 pips away here, give or take. So yeah, Aussie Kiwi, I like that one. Aussie Swiss is that monster runner. I don't know if I'll get the pullback in that or not. And then Aussie CAD is here near support there. Also looks tempting there as we are kind of just bouncing off of this. So we'll see how that plays out. Euro pound, one of those setups here that I talked about last week that I'm on my radar as well. Kind of annoying. So we had a press release come out this morning, something about a parliamentary vote here when it comes to the UK. Someone misled someone else. You see that here. So you got to lift off there into the euro against the pound. And so we got pretty close to there to my entry. However, not quite there. So again, we traded higher, and it seems like I have missed the move because euro pound is now trending lower there. So it is somewhat in the middle of this range here of resistance and support in my profit target. So I'm not going to chase the price. That is not the right thing to do. But again, if I can get some kind of a pop there in the euro versus the pound, I would love to short this pair to the downside and take a quick trade there. In regards to oil, in my personal opinion, it seems like we have some kind of a resolution here on the horizon. There was some back and forth when it comes to headline talks. Like I know Trump went ahead and canceled a meeting. However, Iran went to Pakistan twice over the weekend, and they actually gave the U.S. a deal that had the Strait of Hormuz being opened as part of the deal. However, they did go ahead and defer any talks about the nuclear enrichment and all that stuff. So we'll see how that plays out. I think that oil could come down here if you start to see some continued progress. I think anything below 88, so like 84 to 70s, I think that's pretty healthy for the market to continue business as usual and just, accept that we're going to have a little bit of elevated oil prices. But I think anything above 95 up into the three digits, that's problematic. So we'll see how that plays out there. Yields, though, are coming lower, which I like to see. So the 2-year yield on the US, 10-year yield looks pretty similar as well. Aussie is kind of just firm elevated there. So I'd like to see that in the sense that I like Aussie to the upside there. Kiwi, similar. Eurozone. So, yields are still sticky. So it seems like, they are still processing and kind of expecting some kind of inflationary pressures. And that's what makes this week very important when it comes to the, central banks here, their positioning and their forward guidance when they have the meetings. I'm very curious to see how their stance is, right? Because, for example, in Europe, they were very much looking forward to look past this, and if it's going to be a short-term, one-time thing, they can, continue holding their rates at 2%. And then as the things develop, they were looking to, markets were pricing in hikes. So I'm curious to see what their stance is now, and this just goes for all of them. So Bank of Japan, the Fed specifically, Bank of Canada, ECB, BOE, all of them. I'm very curious to see how their stance is and if anything has changed really. And if things change, then there's some repricing to be done. Okay, let's see. Of course, let's see what happens here in the chat here. Ballout says FX sucks. I agree with you, man. It's been pretty slow here, pretty boring. Are you still considering sales on euro dollar? Yeah. So via euro pound, I think that would be a good bet there. When it comes to the dollar, first of all, look at this candle here that we saw. Pretty much almost filled the entire gap there to the upside. But when it comes to the dollar, it's kind of tricky. It's doing quite well, and we'll get a better look at the dollar as the week progresses because we have jolting consumer confidence on Tuesday, and then we have GDP on Wednesday, and then we have on Thursday jobless claims again and ISM manufacturing, and then you have non-farm payrolls on Friday. So we'll get a better look at the dollar and how the U.S. is holding up there. But essentially here, just to kind of keep it very, very simple, I have a couple zones drawn up on this dollar index chart. This is a daily time frame here, and you can see that obviously we have been just chopping around, right? And so you have support here at the very bottom. This I would call extreme discount if you're looking for dollar to the upside. And then here, this second one, the second green horizontal level here at 98, you can call that a somewhat of a discount if you're going upside, right? And then on the flip side here, 99.5, that could be some kind of a premium that you can sell at if you're looking to short the dollar index. And then at 100.5, if you're a bear, you can call that extreme premium, right? But nonetheless, you are essentially in the middle of this whole entire thing. And so making a directional call here would be very tricky unless you have some sort of fundamental data that really supports one way or the other. As of now, the US has been holding up quite nicely relative to other people. Now, you do have some overperformers there like the Aussie and the yen that are doing quite well. But for now, the dollar index here has been relatively holding up its weight compared to everyone else. And so that's why, in my opinion, I think that the dollar index is trading at a medium, right? It's trading in the middle between premium and discount. And so as far as direction goes and trade setups, hopefully we get some volatility this week when it comes to FX. And if you get a breakout or a clear move in one of these directions, whether it be to the downside or to the upside, then I think you can start taking some trades. So Although I do want to go ahead and short the euro dollar, Tatum, to answer that question there, I think it's a little bit too soon. And I think we have an opportunity to get a better, clearer outlook as the week develops. So if you were to get some strong data here for the US, then of course, buying dollar index here at 98 would be a smart move, especially if you get a move above and holding above these key moving averages like the 200-day, the 50-day, things like that. So we'll go ahead and see. But for now, I'm going to hold that directional call there for euro dollar to the downside very lightly because things can change. So I hope that answers your question there, my friend. Can you tell me the fundamentals, technical, and sentiment of pound yen? Pound yen is a very volatile pair. I can look at the edge finder here. I'm not a big trader of pound yen, so I'm not going to give you the best outlook there, but it seems like the pound basket as a whole is getting a very bullish reading there. So you can see that pound isolated is getting a bullish reading of 10, which is really, really good. But the yen basket as well has actually been quite strong. One thing to note with pound yen, Alvin, is that later in the evening today, I'm in the US, you do have the Bank of Japan. Now, they don't expect to hike, if I'm not mistaken. They expect to hold. However, the forward guidance could be very telling. And if you were to get a very strong forward guidance as far as hiking goes, then you can see some volatility in pound yen, and perhaps pound yen falls a little bit there. So just my thought process there. One thing I would say, guys, the edge finder, and as long as the other products as well, this is the last week, if I'm not mistaken, for the 45% off discount here. So yeah, this is the anniversary sale. It's the biggest sale of the whole entire year. This is the terminal here that I use for making my trading decisions. So I would definitely recommend getting yourself a copy at the lowest price of the year. So don't miss out on it. I promise you guys you will not regret it here. But let's go ahead and do a top down here. So Aussie basket as a whole, we established that it is very strong there. So again, looking to go ahead and buy on any dips on the Aussie basket. You're seeing a clear appetite for risk. So the S&P, the Dow, the Nasdaq, all of them getting a bullish reading. We'll see how that develops too as well throughout the week as we have the tech earnings there. And then you do have the euro pound getting a very bearish reading of 9. So again, I want to participate with that one. This one you can kind of take it away from isolation from the dollar because it's the euro versus the pound. So it's just a matter of which one of these two pairs is stronger than the other. And I think that the euro zone specifically is a little bit of a tricky spot there. If inflation is too hot for eurozone, they actually have some struggling growth on their books there. So strong or very tricky thing to do when it comes to the eurozone is hiking into some weakness versus the UK. We've seen in the past that they've actually had some pretty okay numbers, right? They've been coming out of that hole when it comes to growth there. So that's why I like this one to the downside. However, again, this thing is just trading in the middle there, so I don't want to chase price. It has left the station. But yeah, lots of things on the horizon here for currencies there. One thing to mention as well, it seems like the dollar index, right? If we were to get some better numbers here for the US, it seems like a lot of these dollar crosses are getting some relative discounts, specifically here in dollar CAD. We had this big breakout here. I honestly think that if you were to get dollar CAD somewhere back into 1.355 or 1.35, I think that's a great discount to start looking for buy opportunities on dollar CAD. Let's go ahead and look at the Canadian dollar specifically. I was seeing this here, COT data history. And if you look at the dollar index, you can see a gradual accumulation here of dollar, which I love to see that. And then if you look at the Canadian dollar here, it seems like institutional buyers here have been offloading some Canadian dollar. So I like to see that relationship with institutional people buying up the dollar versus offloading some of that Canadian dollar. And so if we get to dollar CAD here at some relative discount levels, I think dollar CAD to the upside would be quite wise in my personal opinion. Now, obviously that is contingent on the data here for the US. We have a stacked calendar. So if US data comes in lackluster, then obviously the trade gets invalidated, but we'll see how that updates on the edge finder. But again, dollar CAD getting to some discounted levels, I like to see that. And if we look deeper here in the Canadian economy, let's go to, let me remove these here. We'll go to economic heat maps and we'll go to Canada. You can see here that they've been doing kind of iffy, right? So growth is not looking too good. Retail sales recently missed expectations. Marco, how you doing, my friend?
Hello, I'm doing pretty well. How are you?
Pretty good. I'm just going over the Canadian economy here. Not doing
Mhm.
hot there. Unemployment rate did come out better than expected on April 10th. However, it is still elevated against the other peers, 6.7% versus the highest I think is in the sixes, and then you have like the US at 4%. So relative to other countries, Canada's not in a good spot. I was basically talking about Marco as how I think dollar CAD could be some relative value, relative discount here for some
Okay.
upside potential if you get some strong US numbers this week. What do you think?
Personally, I'm looking to sell USD CAD.
Okay.
So I'm looking at this week. We have Mag 7 earnings, which should be important for the equities, which should be important for getting in on the S&P or the NAS. We also have 5 central bank meetings, and the current path is this. So if we go to the rate probabilities, the Fed should be the only one to cut with the current market conditions. So if the conflict in the Middle East ends, then there will be a repricing. But if there's a stalemate and the strait remains closed and the sort of the ceasefire remains, but there are no more significant developments, then it's Fed cuts, ECB hikes, BOJ hikes, Bank of England hikes, Bank of Canada hikes, and the RBA hikes as well. So if I want to play something more long term, I would say it's definitely not a short term play. It would be to sell USD CAD. But what I
Okay.
prefer more is buying Aussie dollar. That would be my top pick. If we can break out of this sort of resistance that we have here, and if we can get the central bankers to commit, I like buying the Aussie dollar the most. So you're looking to play a buy on USD CAD if we hit the support level, or?
From a technical level, I think that you're getting some relative discount now. I must say, excuse me, I have some gas. I must say that the trade idea is contingent on the fundamental data that we get this week. So we have a very stacked
Mhm.
calendar for the US. You have JOLTS and consumer confidence, GDP,
Yep.
manufacturing, PMIs, all the stuff, right?
Mhm.
We'll see how that plays out. If you get a strong outlook for the US, then this makes sense. But if you were to get some lackluster data for the US, then this trade entirely is invalidated. And one thing with the anything dollar related, I was essentially telling the chat here that directionless calls, like a firm call on the dollar direction, is very hard to make just because if you look at my screen here, this is a daily chart. We've been just chopping in this range, and the dollar is right in the middle of this range. It's essentially
Yep.
waiting for a push either direction. So we'll get some more clarity. One thing that I'm hopeful of is that you have some, I guess, like solidified biases from the central banks when they have their meetings and conferences. Like,
Mhm.
Bank of Canada has a clear path. Like, okay, we're looking to do this. If, like, we'll do X of Y. Same thing with BOJ and all this other stuff, right? So, ideally, we can get some clarity from the central banks, and then we can start, trading in that direction. But making a decisive call on DXY or dollar CAD, for example, is a little bit tricky. It's a little bit contingent on what happens later in the week.
Yeah. So maybe remaining patient is the way to go. Are you looking to put a position before all of the data, or you're looking to sort of be patient and wait for the chunk of the week to pass?
Yeah, it's a little too soon now. Ideally, I would have been positioned like earlier. But if you
Okay.
just look at my chart here, that would have been a bad case, right? Because we are at the lowest we've been for a couple days now. So glad I didn't do that. But I would much rather allow all the central banks to do what they got to do and say what they got to say. And that happens Wednesday, early in the morning in my time. So by Wednesday, New York session time, you would have had all of the central banks said what they have to say, and then I think that's still a good amount of time to have some positioning for Thursday, Friday, and beyond.
Yeah, I would agree with you. I mean, right now, so Monday just beginning, we don't really have the situation hasn't changed much from Friday, so there's not a lot of things we can say, but we can only prepare for this upcoming week. I mean, it should be a volatile week. I think we had some Middle East stuff over the weekend, like Trump not sending Vance over to Islamabad. Does it really matter? I don't think so. Let me just take a look at the oil price. Oil a bit elevated, but I mean, sort of hovering near 100, just below 100.
Stock market seems to be pretty healthy. I mean, yes, kind of down on the day, but not a huge correction. And we had a massive uptrend there. So I would say I'm still seeing traders post like Middle East headlines, but I think that's behind us. Would you agree? I mean, traders seem to be clinging on the Middle East conflict. I would say the market is not reacting to any of the news as much as it was in March. So we're kind of moving away from that and moving more into economic data, which is much better, to be honest, much more simple.
I completely agree with you. There has been so much back and forth that it's like the boy who cried wolf. Like after so many cries, they just become a lot less meaningful. So I think that's what's happening. When it comes to the price of oil, and this is just my personal opinion, but anything above, I would say $90 is problematic, especially once you get into the triple digits. But
Mhm.
I think anywhere from like 85 to like 72 or 85 or below, I think that's actually quite okay. Um, when oil being in these ranges like of 85 and below, especially in the summertime, that is very normal. You have demand coming in and stuff like that. So that I think the market can pretty much digest that and accept that. But anything above that obviously is problematic. You have to price in, or central banks have to be mindful of inflationary pressures and whatnot. Um, and we're kind of close. Like, last week, was it last week that we got into the $79, very briefly, but obviously now you have this big pop here. In my personal opinion, Marco, I think that you have some kind of a resolution here in the horizon.
Okay.
Now, maybe
Okay.
in a week or two, but you do have Iran essentially presented a deal to the U.S. Um, talking about the Strait of Hormuz. However, they excluded the whole nuclear development and enrichment, and they
Mhm.
basically deferred
Yeah, I
that.
saw that.
But
Yeah.
it seems like we're kind of heading in the right direction. Like the U.S. canceled that meeting over the weekend. However, Iran still made 2 trips to Pakistan. So I don't
Mhm.
know. My personal opinion is like I'm hopeful that there is a resolution. And just looking at the markets and just referring to that, it seems like there's optimism in play. Like you have equities are on the rise there, which although one can argue that that's pretty dangerous, I would agree. Rising with no pullback here. If you're looking at currency strength here, all the ones that are at the top for today, they're all risk currencies as well. So Aussie, Kiwi, and Canadian dollar. So I would say markets are pretty much like just throwing that to the back burner, and they're more focused on now, hopefully, economic data, and not so much of the headlines.
Yeah, yeah. I mean, it will be much easier. As you mentioned, all the headlines coming out so conflicting. One day it's risk on, the next day it's risk off. And I think the markets are bored as well. Like markets are consistent of
Hmm.
people. People get bored very easily, very quickly. So a market narrative doesn't tend to last more than 1 to 2 months. It's kind of the regular time span of a narrative. So I wouldn't be surprised if we're going into a new narrative. AI race, could it be artificial intelligence? That would be great because it would be pretty simple to trade, I would say. Just buy the pullbacks basically. And of course, if you do Forex, then it's economic data, then it is the central bankers. If I look at gold here, it's not moving much. Let me just put it on my chart. It's just flat. Most of the metals right now are pretty flat, and the 10-year is pretty flat as well. So any opinion on that? One thing that I have noticed is the demand is there. The demand, especially for gold, is there. Like you have central banks buying a bunch of gold, trying to move away from the US dollar. You have China trying to again also move away from the US dollar, buying a bunch of gold. So the silent demand is coming on, but the price doesn't seem to be budging much. Just wanted to get your take on that.
Yeah, I think that it is one of those things that it's like a sleeping bear, and then once you poke it, it starts to wake up.
Mhm.
Ideally, if you can get gold, and I've said this multiple times, but I like 4,400 and 4,200, those areas here of support. It was clear support. It was resistance one time, then second time, and then it became support here, especially after this big drop here, and then this also recent big drop here. The 200-day moving average is also within this range as well. I think that, gold may be annoying at the moment, especially if that's like the only asset class that you trade. However, we're making a slow
Yep.
grind lower. I would love to see some continuation in that. And if you were to get gold at 4,400, for example, I think that's some good value, especially if by then you
Mm-hmm.
have central
Mm-hmm.
banks starting to do what they do and make a clear positioning, and the war is a little bit more behind us. Then I think that would be great. For silver, I have my own opinion on that one. I don't like silver at all. I'm not even gonna
Okay.
like have a clear directional call. You have history telling you that when you have these big monster run-ups there, the forward-looking returns are very bad, very hard to trade.
Mm-hmm.
Silver was like
Mm-hmm.
very gamified in my opinion during this big run up there. So not something that I want to continue trading. One can argue that there is some commercial demand when it comes to the AI race and the infrastructure and everything like that. I get that, but also too, just looking at history, when you have these mean run ups there, and you have a bearish close of a candle following that, the forward looking returns just suck. It's untradeable. And so I think gold is a little bit more established and I guess more respected in a sense when it comes to like safe haven demand. So I'm
Yep.
gonna just throw silver out the window.
I completely agree with you. I think there's a sort of a data point when silver makes more than 100% in 1 year, the next year is break even or negative.
Hmm.
And silver made like 170% in 2025. So 2026. Historical data is telling us 2026 won't be great for silver. Now, yes, there's a big correlation between gold and silver, but that doesn't mean that gold has to sort of be break even or negative this year. There can still be outperformance of gold compared to silver. And like most of the analysts that I'm following, they are saying gold goes to at least near all-time highs by the end of this year. So it is now almost May, almost half of the year. I mean, not really, but kind of. They're saying by the end of the year we should go back to 5.4 or 5.5. So I would like to get a buy position. I would actually like to get in on a buy position here, but I'm waiting for the edge finder confirmation, which is staying neutral at the moment, I believe. And one thing I don't want to do, neutral. One thing I don't want to do is I don't want to get chopped up in the range. That's kind of the worst possible thing for me, just placing a trade and then get chopped up for weeks. And before we continue, I just want to post the link to the giveaway form. So if you guys want to participate in the DNA funded challenge giveaway, it's a 10K one phase account. I have just posted the link to the form in the comment section. So open the form, fill it out, and you will get entered into the giveaway. What's your take on Bitcoin? What do you think about that?
I don't have a strong take. I'm not a trader of Bitcoin, but just
Mhm.
me looking at this from a technical perspective and understanding that the edge finder has a bullish reading on it. You're above some key moving averages, like you've crossed successfully above them. So you had essentially the 50-day and the 20-day acting as dynamic resistance to the downside. Now they have since crossed, and now you are above those moving averages. Now the next line of defense would be that 200-day moving average. So in my opinion, I think it's a good buy. But again, I'm not an expert. I'm not a crypto trader. I've never traded crypto, so
Mhm.
I can't say that my words have any weight to it. But just looking at this from an outside perspective, I think that if you have a longer term view on crypto, like if you're maybe looking to establish a longer term position or trade, whatever the case may be, I think this is okay, right? Buying it here, you have your stops below right here, like around 58, 55. And then you kind of try to catch the upside to maybe 100 or maybe 110. I think the whole like, crypto's going to retire you trade is gone. I think now it's going to be
Yeah.
more stable and more like, trading it like you would another asset, right? But
Mhm. Mhm.
I think having that mindset would also help as well. But don't have really, again, my directional call here on Bitcoin has no weight to it. But what about you, Marco? I know you've traded crypto before, right?
A little bit, a little bit. I think the lottery ticket is gone. So for those traders that are going in and waiting for Bitcoin to hit 1 million, I don't think it's going to happen, at least not in the next 10 years. You also have quantum computing, which is a big problem for Bitcoin because quantum computers can actually basically crack the code of Bitcoin and Bitcoin goes to zero because they can hack your account and steal all of the Bitcoin, basically. So that's one problem, and quantum computing could be here in the next 10 to 15 years. So the developers of Bitcoin first need to make sort of a firewall against that. But the second thing is the price is too high for the lottery ticket. I think the lottery ticket factor comes in at, let's say, 30K, if we go to 30K. Having said all of that, I'm still looking to position myself long because I think we can at least go back to all-time highs. I think that can definitely happen. It has happened in the past. And personally, I do see a use case for Bitcoin in the future. So I do believe in the technology. I like that we have broken out of this range. So we had some nice price action over the weekend. We held, meaning the bullishness held. And the edge finder is bullish as well, which is nice to see. Let me just double check that. Not Bitcoin, but Bitcoin. Bitcoin. Bullish. And I would be looking for buy setups. A quick stab long, stop loss probably below 70, aiming for somewhere below 100, maybe 96, 97. I think that's a pretty high probability position to have.
Sure.
And
then
I
was gonna say, one thing about gold here. I know you're more active in gold as well. Like, this is something you trade. Besides the edge finder score being bullish, is there a certain scenario that you're looking for that the viewers can be mindful of as far as for gold? So like bullish edge finder, and then also a confluence of other factors. Is there like a specific environment that you're looking for gold?
I think what you have been saying, bond yields. So essentially, gold should be inversely correlated with bond yields. Is that correct? I think it is. So essentially, when bond yields become very attractive, gold becomes less attractive. So bond yields should go down if we get more of a resolution in the Middle East. So that should help. That should help bring gold prices back up. So that could be another factor, although I'm not really counting on that. So I'm trying to keep it simple. I'm just waiting for an edge finder confirmation, and then I'll take some risk, take an initial stab long, and see what happens. So not trying to overcomplicate the whole story.
Okay. I see this comment here. I hope you didn't get scammed, my friend. It says I have your money. I hope I promise I don't. So I don't know if it was an impersonator, but please try to recoup whatever was lost, because it was not me, my friend. This is the real me, and I don't have it. Okay, cool. So yeah, yields lower. I would agree with that. Yields, obviously, higher yields make the cost of holding gold a lot more expensive, and so people flock to better things like the US dollar in this case. But anything else, Marco, here before I head out here, because I know my portion here, this segment is done. One thing too that we can definitely piggyback on tomorrow is Japan. They have the their meeting here. JXY is currently very, very low. So we'll see. Do you think that there's going to be some hawkish comments there this later in the evening, or no?
I think so, because it's the cheapest option to manipulate the price, if that makes sense. It's actually free. All they need to do is they need to come in and say, we don't like the current price of USD JPY, and the market sells off just on that. So I think there's going to be some hawkish comments. Will it go full-on intervention, saying that they're considering an intervention? I don't think so, because we need to see price at least cross 160 and go to 161, 162, like the last time it happened. Let's just briefly show the audience. USD JPY. I'm definitely closely watching UJ. Anyway, last time it happened, it was in July 2024. I'm sorry, I'm seeing the comments.
I know, I'm seeing that as well.
Alan, what did you do? Anyway,
1994. I promise I was not born. I don't know if that was what that. And then Robo as well here, starting a trend. Hopefully we don't start a trend. That's not a good trend to start. But continue, Marco. My bad.
Yeah, no worries. So USD JPY last time was in June 2024, and the price definitely crossed 160. So we didn't just stay near 160, we actually went to 161, almost 162. So I think we need to see more decisive moves higher and then we can get an actual intervention. But hey, I'm just gonna sell at 160, and if we get a sell-off like the one on the 19th, the one on the 8th of April, the one on the 17th of April, I'll go ahead and take profits until there's an actual intervention. Then I'm gonna be trailing the stop loss.
Awesome. Good play. Yeah, I agree with you with that as well. All right, Marco. Well, I will go ahead and let you do your thing with the DNA
Sure.
funded giveaway. Thank you guys so much for watching. Join the free Telegram channel. It is completely free value. And we'll talk tomorrow, man.
Sure. Talk tomorrow. Goodbye.
All right. Bye-bye.
So I will post the link to the giveaway form one more time. Here it is. So it's a JOT form. If you want to participate in the DNA funded giveaway and get a free 10K one-phase account, just fill out this form and you'll get entered into a wheel of names. If you want to get funded, we have a discount code for you. The discount code is A1 Live. Okay, it gets you 25% off any DNA funded challenge. So the code A1 Live is 25% off any DNA funded challenge. This is my personal 25K two-phase funded account. I have 3 positions running at the moment. The account is down $550, so it's fine. You know, it's what 2.6%. It's not a huge problem. But of course, the goal is to get a payout, and I'm also trying to keep my max daily win under, let's say, $400, something like that. That's kind of the goal to stay inside of the consistency rule. Yeah, had a great experience so far. Trying to get a payout. This challenge is purely traded by ChatGPT, by the way, which is interesting. It's basically for my YouTube channel for a series I'm doing, and let's see what happens. Don't forget the code A1 Live. I saw a comment from Max. So Marco, you know that if quantum computing goes, BTC is not the only trouble. The complete financial system is in trouble. Well, that is correct, but the thing is that the big banks will protect the current system. So there are people, very smart people, that get paid a lot of money working at banks who will protect the system against quantum computing. But for Bitcoin, there's not really one single person that can upgrade the system. There's not really a huge bank that can work on the code and protect the code against quantum computing. So I think the fiat system will get protected for sure before quantum computing is released. But Bitcoin, you need people to get together. You need all of the exchanges to get together. You need all of the wallet producers like Ledger, for example, to get together and do something with the code to protect it. And that's a lot less likely than a bank getting together, paying a bunch of smart people to protect the fiat system. That's why I think Bitcoin is in more serious trouble rather than the classic financial system. Okay. Let's see. How about Swiss yen? Swiss yen? Let's take a look. CHFJPY. So Swiss yen kind of stuck at a resistance level right there. So will the price go above that? I'm not sure. You have both the SMB protecting the Swiss franc, or not protecting it, but wanting to devalue the Swiss franc because it's hurting their exports. And you have the Bank of Japan trying to protect the yen by raising the value of the yen. So is this a price ceiling? Maybe. I had a bet. It was a losing one, unfortunately. So I lost this trade. I'm not looking to re-enter. Personally, I would stay away. Yeah, I would stay away. Edge Finder is probably going to be neutral. Let's take a look at that. Actually, bearish. Okay, bearish score right there. Yeah, I wouldn't go in because it's too uncertain, in my opinion. And I've had a position which lost. So I would much rather go with USD/JPY. I think it's a more simple play and a bit safer as well because you have a clear level. So the SMB and the Bank of Japan, they're not looking at Swiss yen. They're not. They're looking at Euro Swiss. They're looking at the 0.9 level. They're looking at USD/JPY. They're looking at the 160 level. So it's much easier to trade something when the central bank has clearly defined the level that they don't want to see get broken, rather than looking at Swiss yen. Hopefully that makes sense. Max says, Marco, that's called a beep. I'm not sure what a beep is. They will take BTC to the moon, then all banks and hedge funds will short and it will go to zero. I personally think it will go above that level sooner or later. Marco, NZD USD, it seems disappeared from setups page. NZD USD. Okay, let's take a look. NZD USD. Let's see. I prefer Aussie dollar. So long term, I would be bearish on the dollar and bullish all of the central banks' currencies that are hawkish, that are hiking. NZD USD, I think Aussie dollar is a better play. Let me see just on the Edge Finder. AUD USD. Bullish, yeah, much better. AUD USD even printing a bullish reading. So I think your edge is better in AUD USD rather than NZD USD. So I would just focus on the Aussie dollar. Okay, that's my take on it. Let's do the giveaway. Let me copy all of the entries. So today is the 27th of April. Let's take a look. 27th of April. Okay. Let's copy. Go to the wheel, paste, spin. So let's see what happens. Jack or Bruce? Jack F. So Jack F, congrats on being the winner. I have your contact information. So after my segment ends, I will send you an email containing the link, or not the link, the code for a free 10K one-phase account. Okay? A reminder, if you want to get funded, DNA funded, you have the code A1Live, which gets you 25% off. Okay? You get a pretty good price. Much better price than, let's say, FTMO, 5%ers, E8 markets. So you get a safe prop firm and you get a good price as well. I have 2 more minutes. Let's see. Not trading dollar at all. Sluggy says that he's patient on the dollar. I do like that, you know, especially at the moment. I think that's not a bad way to go. It's flat, middle of nowhere. If you're talking about NZD USD, I would agree. Marco, a BIP is a Bitcoin proposal. Okay. Again, I'm not a crypto expert. I've just read a couple of articles, and the articles are saying the fiat system will be protected much sooner than the crypto or the blockchain system or the Bitcoin transaction system, because the incentive to protect the fiat system is much, much higher. There's going to be a lot smarter people getting paid millions of dollars to protect the fiat system against quantum computing. And of course, it can be done. You know, we can do anything if we set our mind to it. So if we can invent quantum computers, we can for sure protect the current technology against quantum. Okay, why is GEP-CAD dropping? I don't really care about GEP-CAD. Sorry, I'm not gonna do GEP-CAD. I'm gonna do the NAS. Yes, that is a bit more interesting because I still have 1 more minute. So Nasdaq, I love it. I love the Nasdaq. I love the Nikkei. I love the S&P. I want to get in. I want to get in on a correction, on a pullback. Will we get a pullback? Not sure. What I do know is this week is Mag 7 earnings. So we have a bunch of earnings this week. Looking at the past, Mag 7 consistently beats expectations makes the Nasdaq absolutely fly. So looking for pullbacks to this level of support. And I think Nick is looking for the same thing. So I'm focusing, yes, on the Nikkei. I would rather take a position on the Nikkei, but why not maybe take a stab on the Nas if the price looks good? So I'm looking at around 26.2 to get in on the Nas. I'm not going to be chasing the price. I'm not going to be getting in on the all-time highs. I will be getting in on a correction, on a pullback. If I don't get a pullback, I won't get in. That's it. So that's about it from my segment. Thank you very much for watching. I wish you good luck in the markets. You can catch me every single day this week except on Friday. Don't go anywhere because Tiger is coming on right after me. And that's about it. See you in the next one. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Monday. Hope you are all doing well out there. Let me know in the chat what tickers you guys would like to check out. Yeah, so we didn't get our meeting over the weekend after all. And I was watching Bitcoin Saturday, not only for that, but obviously with the craziness we had at the White House Correspondents' Dinner. And despite the fireworks, I didn't really see it moving a whole lot. So I'm just kind of curious if this week, from that would be another kind of week similar to last week, but not at all, ladies and gents, because at least this week we have a little more fireworks when it comes to rate decisions galore. So obviously tonight we get Japan's, and then Wednesday's Canada, US. So that'll be a big day. And I think we're going to do some later streams on that day to coincide with the rate statement. So stay tuned on that programming change or alteration, if you will. We'll be on a little bit later. And then obviously Thursday, we got the pound and the euros numbers coming in. All these rate statements look like they are projected or forecast to remain the same as the previous number. The Fed tool shows 100% straight up today. Okay, as far as the rates here in the States stand at 3 3/4. So that's that. That's where our fireworks are going to come from, most likely. And then obviously, guys, if we get anything out of the Middle East, the blockades, any more cussing and discussing over there, then that'll potentially add to it as well. Hopefully something happens, because last week was just boring. I'm telling you, I was all excited Friday. I made some material on my other channel for possible plays as a result of the Islamabad summit, and then it didn't happen. So it just wet my wick. So there we go. What we got up here? Good morning, Alan. Alan. Christian, how's it going? Sold pound yen just now, targeting the low for 10K. What's the forecast? Yeah, let's take a look at that. And what do you mean, Silvertion? Can you check out HSI chart? What's HSI? I'm not sure what that is an acronym for, so just clarify that for me. But yeah, let's first I wanted to take a quick look at the COT report, and then we'll jump on pound yen for you there, Ronaldo. They did buy the Dow, guys. If you haven't, if you aren't doing it yet, definitely make sure you check out all of Nick's videos on the weekends. He does a really awesome job about, and he spends a little more time also on kind of the upcoming week setups and things, having a look at the COT report. And you'll see where he titled his video, They Bought. So he's talking about the Dow, guys. Look at this, 6.3% of a net change. Long contracts added 2,800. They did add a few shorts, but it was overwhelmingly on the long side. So definitely interested in some Dow opportunities this week. If we can get any discounts that I like to see down to zones of demand. So that'll definitely be a kind of one of my main things I'm looking for. Pound dollar, that's another one I'm really watching. You can see they did increase long change on the pound by 2%. Now, they did increase the dollar by 0.3%, but the pound had a much higher increase, guys. 8,100 long contracts, even though they did also add 5,400 shorts. So the math of that says 2% was added to their long percentage, or long exposure rather. And so that's going to automatically be one of my favorite pairs. And not only because it is showing, I think, a +6 on EdgeFinder, but because the sentiment analysis is in our favor just a little bit. So yeah, having a look over here, there's pound dollar at a +6. We'll take a look at that one in a second, because I think that there could be a pretty decent liquidity sweep en route to a zone of demand that I'm personally looking at. And then Bitcoin as well, that play still remains in play for me. And then other than that, I am still in that Netflix long. That's still currently the only item I'm in. But yeah, it's just going to have to do its thing. So we'll just leave that one alone for now. But yeah, you were asking about pound yen. So let's have a look at that for you. Don't see it on the edge finder. So it looks like we are going to get a little bit of, oh my goodness, where's it going? Neutral rating on that. My mouse, what's up with my mouse, ladies and gents? So yeah, pretty well neutral. Just have a look at the actual scoring. We do have a +4. So the technicals look good. The sentiment looks good, but the fundamentals, which in my opinion are the most important, are looking, if anything, just a little bit on the bearish. So mixed signaling right now on the pound yen. But if we just have a look at the technicals over here for you, let's go find that. And you guys know I always start with my 2 chart look. That way I can look at my daily on the right and see that indeed it is matching up with what EdgeFinder says. Really strong bullish look to it. The 8 is above the 21 EMA. So there's my mechanical trend confirmation, not to mention the breaks of structures over here to the left. So really strong break, a little bit of a retrace, or maybe even a little bit of profit taking, if you will. And then it looks like the buyers have slowly kind of taken back over and broken yet another structure. If we just take a look over here at the 4-hour chart. So now I've got a purple dashed line up there. Why is that, Tiger? I have no idea. Let's just go have a look. I think this might be a weekly supply that I just drew up in purple lines instead. No, I think that was a monthly, actually. So let's go to a monthly chart. And let's see why I drew that. Yeah, here we go. So keep in mind for the pound yen, guys, we are in a 1-month supply zone as we speak. So a monthly, and then you can obviously see within or inside of it, I got a daily, and then I've got another little rectangle there. That's, I think, a 4-hour. So got a monthly, and I'm sure, I don't know, if I go to a weekly, it's probably even going to show there as well. As many confluence as I can get as possible, guys. That's what I'm looking for. Now, this is, if anything, is close to being a bullish signal, okay? But I still want to be aware of the fact we're in a supply. So here's what we got. We got the purple, which is the monthly supply. We got the weekly, which is actually the biggest rectangle, and then the daily. So that's how that works. So we are in kind of a zone where I don't want to be looking to buy anything until we can break through it, because you can see how strong of a decline we had from that point in time. And this, of course, is 2008, ladies and gents. So that's going to be, just about the time of the housing crisis getting ready to start, right? You can see pound yen just had a big falling out. So look, it's taken however many years that is, 18 years, but we have made it back to that point in time. So again, a lot of people think those things expire or have a shelf life. I don't really think they do. I think people have a memory that goes back as far as they need to where they can see price consolidate and then had an ugly, ugly drop. So I'm just a little cautious on pound yen, even if I had a bullish signal on the edge finder. But the reality is we're not even that far from breaking the rest of it. See, this is the proximum line down here of the monthly supply. And then obviously you see the, the weekly, the daily kind of inside of here. So we've broken through all that. And all that's left is just a tiny bit of the monthly, which we've actually pierced, but haven't really closed yet. So if we get a close on like a 4-hour candle, then I can 1000% say I'm over the monthly, weekly, daily supply zone from 2008. So for that matter, we're probably good to go. So if we do get a bullish signal in EdgeFinder, yeah, I think we'll probably be good because we have actually broken it. But as far as places to buy, I got to be honest, if we're looking for discounts on this thing, this is sick. I'm not really getting any gaps. Okay, I'm not getting any acceleration gap showing that we had demand heavily exceed supply to the point to where we created that inefficiency in the market. So really, I just kind of look at this whole area here as just a puke fest. Okay, a little bit of a retail chop area. There's really two ways I'd be excited. Number one is if we get a decline all the way down to this zone of demand, which is definitely a lot deeper, 212 3/4, it looks like. Or we just break through the rest of this monthly supply and actually get a close. So maybe something like this, get a breakup, close, and then a retracement. Perhaps we can form a new demand zone here. Because I got to be honest with you, I don't like any of this junk down here. This is just too efficient of a price structure. Without gaps, that tells me it's efficient. Okay. I need an inefficiency in the market. So with this candle where we're at now, if we could get a nice push up, next candle opens up higher, that would create a gap. We just don't have it yet. Okay. So that would probably be a good play. But again, like I say all the time, need more information. Need a gap. Not to trade the gap, but just to show that demand heavily exceeded supply enough to leave an inefficiency in that price structure. So yeah, not really anything I'm interested in right now. Once we get it back onto the EdgeFinder, then we can talk. So hopefully that helps a little bit. Let me take a look over here. What's up, Tiger? Euro Aussie for Biggie Dub. Yeah, let's have a look at that for you. Euro Aussie, Euro Aussie. Euro Aussie, Euro Aussie, Euro Aussie. Where are you at, Euro Aussie? Let's get to my top setups. My computer doesn't freeze. Yeah, -8. Okay. So we got some bear signal. And I was looking at these this morning, and I got to be honest, I didn't like these either. I really, because this is kind of the same thing. We're kind of getting that, we're getting a decline since the end of March. So basically the month of April, we've had a bearish trend on this thing. But again, the only gap I can really find in this more immediate area on a 4-hour chart is right here, where you can see we do have a former support that actually became or could potentially become resistance. Or you could look at this wick here as kind of the start of that support becoming resistance. So that's a potential play. Yes, I do have a supply zone. Yes, it has a gap showing supply heavily exceeded demand. And it did keep going from there. We kind of broke through this. Well, no, we're still breaking through or trying to break through this demand zone down here. But the thing I don't like about this zone is it's too low on the curve. I would really want something higher up. Like I think the play's already been made, and that was this supply zone that we had up here. Okay. The play's already been made. So that supply zone was rejected. There on a smaller time frame. That looks like I drew one up on I don't know what time frame that was. Looks like a 1 hour. Okay. So on a 1 hour chart, I had a supply drawn up. That one obeyed it or pushed down. And then really I think about the next best thing is where we're at here. At least some VSA activity kind of picked up on this way out. But I have to look at this thing on a 4 hour, and I just think it's a possibility. I was kind of clowning it this morning on some of my other material I was making, but it might be a good spot. I mean, at the end of the day, we do have a wick here. So there may be a little bit of buy orders up in this area, which of course are stop losses for these guys here that pushed price down or shorted it. Liquidity sweep, unfilled order potential from the supply zone, former support potentially becoming resistance. I mean, that's a few decent odds enhancers. I don't know though. I just think it's too low. I wish this would have been up here, but again, it's already kind of worked out. I mean, the play's already been made. We're obviously coming into some higher time frame, drop base rally type action here, drop base rally. And that's kind of where we're at now. I don't like it. I don't like it at all. I got to be honest with you. Either break all this structure and start a new series of lower lows, lower highs, or if you're looking to short, I mean, I just wouldn't risk a full risk on this. I'd be definitely cutting it in half, maybe 2/3. There's probably better items out there, but the good thing is you do have your 50 below your 200 EMA. It looks to me like by the time price does get up there, that EMA will go through your supply zone. So that would be a good odds enhancer added to this as well, something like this. But as always, not financial advice. That is just definitely the spot that I'm keeping an eye on, but with a little bit of bated breath, let's call it. Okay, so that's Euro Aussie. What else we got up here? Okay. So yeah, other than that, okay, again, we got our rate statements coming out. The main one is tonight for the Bank of Japan. As far as yen-based assets go, yeah, Japan was sold off, it looks like, by 1.5% from the banks, the institutions. What about Edge Finder? What do we got over here? Okay, Swiss yen shorts, Kiwi yen shorts, and then I think we had a dollar yen. I think I saw that just a little bit ago. I think I did. Thought I did. Maybe I didn't. Okay, Aussie yen, that was the one I was looking at. So let's take a look at a couple of those and see what possible plays could come out of that. Aussie yen longs on Edge Finder. Let's have a look. Okay, get my other chart up over here. Daily. Okay, so this is looking good. 8 is above 21 comfortably, breaking structures, new highs. So this is what I like to see when we start coming into overhead supply or overhead resistance. Okay, I want to see price forcefully push through that. That way we can kind of start a new series of higher highs and higher lows. Look for some impulse moves. So this is a 4-hour chart. But here's the thing that I'm a little hesitant about. If I try to find a discount down here in a demand, there's way too many candles to the left. I just don't like this picture. Okay, we did have a Sunday gap down. It's closed, so this thing is off to the races. At this point, I got to be honest, I think the only thing I'd be interested in is maybe one of these zones on a little bit smaller of a time frame. But let me see what a 4-hour looks like one more time. Yeah, that's not good at all for a 4-hour. Obviously, you got a little bit of a 50% retracement to this. Could potentially be a little bit of zone of demand. But again, guys, the smaller the time frame you go, the noisier it gets. So just keep that in mind at all times. This would probably be something I'd be interested in, but just again, kind of cut off the risk a little bit, not risk so much, maybe half, maybe a third, something like that. But that's, if you're just looking at swing highs and lows on this impulse leg, well, that's a 50% fib retracement right there. So that might come in play at some point. Volume spread analysis, it could look a lot better, but it's not hideous. Just basically need RSI to drop down closer to 20 and maintain this 50 over the 200. And it's looking all right so far. Okay, alligator's mouth is opening up there. That might be a possible play, but I just think it's a little bit riskier because, again, we're starting to get down into the smaller time frame. So I'm going to go ahead personally and put an alert there just so I keep an eye on that this week, kind of see what happens. I'll just throw that out through the end of the week. There, we'll just worry about that later. But there you go. So I'm going to keep an eye on this one here. Oops, I didn't mean to do that. This alert here. As far as retracing down to the origin of this overall strong move, I don't know. Let's go see, I don't like any of this down here because look underneath. All we get is blue candles for the volume spread analysis. Okay, down here. That's not enough to get me out of bed. It's really not. This is a little better. And obviously the best candle you see is right here, but which is kind of in that same general area. So on a 1-hour time frame, yeah, that's the spot I'm going to keep an eye on, 114.21, and just see if we can't kind of scalp a few pips out of that thing. I wouldn't be trying to take this thing 100, 150 pips or anything. Why is pound CAD dropping? You know what? I kind of wonder if it's because of this right here. Okay. Prime Minister Starmer to face vote on possible parliamentary probe into whether he misled Parliament over Mandelson. I'm not familiar with Mandelson, what Mandelson is or means, but whenever that came out, there you go. Pound dollar just had a big drop. So I imagine all the pound pairs dropped, didn't it? Let's go have a look at pound CAD, pound dollar first. Now, pound dollar is the one I want to buy. So I'd be okay with the fact that it's dropping pound if it can drop it deeper into my demand zone, which again it's still a ways away, and it may not even get there, ladies and gents. But if it does, I've got a button with a B on it ready to smash it. So I'm okay with getting some negative news out of Great Britain, because negative news would help drive this down to my zone of demand where I think the unfilled orders would take over. And not to mention the fact that, looking at your, kind of looking at everything as a whole, it's really nice look on the technicals. Crowd sentiment's getting a little bit of a bullish look to it as well. It's a little choppier on the fundamental side of things, but overall, we're getting a bullish signal. So, hey, bring on the negative news. Bring it on. I'd like to see that. Let's go look at your pound CAD, though, since you mentioned that. Yeah, like I said, that's just my speculation. Pound CAD, I've got some zones further down, but I'm not really interested in it like I am the pound dollar. To me, it doesn't really look that bad of a drop. I don't know what time frame you're looking on, but okay, yeah. And this is about where that Curious Farmer headline came out. So, yeah, I don't know. You giving me something to look up today? Because I'm kind of curious myself to see what this Mandelson is. I don't know what that means. I'm not sure what that means, but bring it on. Bring on the bad news. Yeah, exactly, Yoshi. Yeah, not to mention the dollar decline. Okay. When you have ceasefires, when you have possible peace agreements, which obviously they're all getting delayed right now. Okay? Any possible peace thinking or whatever is definitely going to probably take money out of the dollar, possibly put it into some other items like gold. So, but yeah, that's kind of where we stand on that. But I wanted to take a look here at a couple of these Aussie pairs as well. Now, Aussie didn't really get that big of a boost over here on the COT. It was a 0.03%, so pretty much zero, pretty much negligible. Okay, they got rid of longs, they got rid of shorts. It all calculates to 0.03%. So, again, if I'm just looking at isolating the COT, which of course this is not the end all be all, but it is a big report I like to look at. Again, the sentiment analysis is how I even found Nick. Okay. If you guys haven't gotten the Edge Finder, you got to get it. But on his website, the retail sentiment is actually kind of a freebie on there, or a flirt, if you will. Okay, that's how I got suckered into it. So when I started digging into the sentiment side of things, but this is important, and that's what I like to see if I'm trying to buy the pound dollar. Okay, I like to see the pound getting bought up more so than the dollar. But anyway, yeah, just finishing on the Aussie. Okay, it didn't really get a whole lot of help. So not saying I won't be interested in these, but it's just a little bit of a downer because of that. Okay, Aussie Swiss, Aussie Kiwi. I do want to take a look at those real quick. I'm on here for what, another 7 minutes? Okay, just looking at my time over here. Everything looks good on the trend on these things. Okay, trending up, higher highs, higher lows. 8 remains above my 21 EMA. We do have a zone of demand over here. I really like this, guys. Okay, I really like this area at the 0.55 half level. Kind of a medium psychological number, if you will. Okay, anytime you get the halves or the ones, it's good spots where retail traders, just because it hit that, will hit the buy button. So anytime that buy button's hit, there's typically liquidity on the opposite side in the form of stop losses. So I like this. I would probably want to give this a little bit more room as far as a stop loss goes. I might even take into account this this gap open we had from 2 weeks ago, actually, and kind of incorporate that with my stop loss, because there's definitely going to be liquidity there as well. So I personally would probably widen this stop something about like this to take into account the liquidity that's sitting right here. Okay, so that would be my stop loss if we get a retracement down in here. Again, guys, not financial advice. That is definitely a spot of interest that I'm looking at. With that comes liquidity in this area here. So that's going to be sell orders right in here from all these buyers, this consolidation, demand exceeded supply, and it's proven because we had that push up and then continuation. So I think there's probably going to be some liquidity hiding right in here from these buyers. So again, if I'm a bank, if I'm trying to accumulate or continue in my order, then I like to see spots like that where I could take advantage of some stop losses. So drop, suck up this liquidity, fall into the unfilled orders from the demand zone for possible buys. That is what I'm looking at on Aussie Kiwi, or Aussie Swissy rather. Remember, Swissy is the second weakest currency right now. Let's just have a quick look at the surprise index. Second weakest currency at 33%. So 2/3 of its high impact readings have been missing the mark. Economic underperformance for that particular currency. And then when you look at the Aussie, or I should say the pound and the Aussie, that's number 1 and number 2. So they're really outperforming the forecast. And like Nick said on his video, that doesn't necessarily mean it's the strongest economies. It just means that they're just exceeding what the economists are forecasting, what they're putting down. Okay. So it's looking pretty good on the fundamental side of things. You still have sentiment to worry about. You still have technicals to worry about. But when it comes to the most important thing, fundamentals, the hard data, getting away from the rumors for a minute and just looking at the real numbers, it's looking pretty good. So that's why I like these Aussie pairs it's given us at the top. And then obviously the pound dollar a little deeper down. And then, of course, you got the yen in there as well. So let me double check over here. Sally, for Marco's YouTube, it should be Marco's Trading Journey, I do believe. Marco's, there you go. It should be this one right here. There you go. Marco's Trading Journey. At Marco's Trading Journey. That's how you can find Marco. Okay. So there you go. And then, yeah, Aussie. So we looked at Aussie Swiss. I want to look at Aussie Kiwi again as well. So Aussie Kiwi, I like it. I like it's up there at the top. But again, I just can't quite get over the fact that we're bouncing into this overhead supply zone still. And I know I mentioned this last week, but it bears repeating. I ultimately feel the most comfortable when we break structures and kind of reform things. So, kind of reform a new structure. So if we break structure like this, close up here, then I'd feel more comfortable with a retest of a newly created demand zone at that point. So this is really option A and option B that I'm looking at here. And I'll color this one yellow just to separate it out. If we break structure and close and then retrace, I like this for potentially a regular risk. But if we don't, and if we just come straight down and follow this green path, well, I love the fact that we got a daily 4-hour demand zone confluence there. But I have to also keep in mind, we didn't break a structure. See, this price action here did not break this price action here. It looked nice. It had a lot of green candles in a row. But I'm all about breaking structures and proving your strength. Because you could really pull a supply zone out of this if you look like this. Okay, you could see that this actually created a supply zone. And did it break it? Did this demand zone have the strength to break an overhead supply or a swing high or a resistance point? Nope. The supply zone grabbed it. It caught the unfilled orders and it pushed price back down. So that's why I think this is my second favorite trading opportunity. This would be my first. And from here, I think that would just be the best. I think that would be my favorite right there. Now, if we create a new demand zone in this area, well, actually, I take that back. There's too many candles right there. So we'd have to do something completely different. I stand by the yellow. Okay, that would be my favorite. Let's just wipe out the rest of this overhead supply and then drop, get a big discount, ladies and gents. As long as Edge Finder keeps giving us a good score, that's probably going to be my favorite one. But it's probably not something that's going to happen over the next 5 minutes either. It only moves about 60 pips a day when we're talking average true range. So that could take several days. This could take a week. We may not get this until next week. But a little bit longer term, though, we do have a weekly supply zone overhead. So it's not in the picture just yet. That's why I stopped this line short of it, because if it bounces into the weekly, that might change things just a little bit. But that would be ultimately my favorite place. So that's that. Let's see. Euro pound. I think I'll end it on this because we're about out of time. This is another one of the bearish items that we're getting, -9, as you can see over here. I do have a little bit of supply overhead here and kind of the same thing. Former support, but potentially becoming resistance on this thing. So I'll just kind of draw that support line up there, guys, so you can see. That is something I'm going to keep my eyes on. And you can see we kind of got close to, but we did miss it. So that's going to remain into effect. Probably just a quicker trade. Come up. Let's get rid of some of these lines so you guys can, so I don't confuse you. But yeah, that's basically what I'm looking at. Hope this makes sense. I know I've seen like 3 or 4 plays out there like this, where we've got some former support becoming a resistance, or vice versa, former resistance becoming support, lining up with some supply and demand zones that I'm keeping my eyes on this week. So that's what I like. I think that's about all for the time being. Again, Netflix still there. We're still within our weekly demand zone, which is where I put my stop loss below. And that's about all I got for you guys right now. Look forward to Japan's Bank of Japan's release. Okay, their lip flapping session, their cuss and discussion. And tomorrow when we come in, we'll see if we got any plays off the Bank of Japan decision. So with that, have a wonderful day, ladies and gents. Stay safe, stay well, Yoshi. Absolutely. We'll talk to you soon.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.